All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. Let's talk about Friday's price action. So, light sweet crude, normally where I, focus the majority of my personal trading, but I do analysis on 4 different markets. Guys, what a little bit of a choppy morning, and then we ultimately pushed into much higher time frame resistance. You can see my analysis above my head. This is my higher time frame analysis. Comprised of a weekly chart, a daily chart, a 4-hour chart, right? Like each of these lines represent different time frame, but right there, guys, that's what I was watching. We tested it, we fell back, we pushed up again, and really, depending on if we can break these wicks, will let us go lower and find potentially new support in this area. But I was very well aware that this line is a line that we need to be concerned about. So, choppy price action in the morning. We get a low placed here. We come up, we bang around a little bit, come back down, place a higher low. I like this higher low. There was some selling absorption that transpired, a large buying imbalance that transpired all inside the wick. And this just bumped really hard, really fast. Took some profit here off of the overnight lows. You could see before we took this strong breakdown, this line here has played a role all day. And so we pull in, get absorption, a buying imbalance, we rip back higher through that line, back into this trend line we had in place. And that's, the lion's share of what I did today, right? I was one and done, very pleased. I sold the lion's share, or the big chunk of my profit here at this line. I sold the rest here, and then I got stopped out with the little bit that I was holding, just in case the market decided to run for the rest of the day, which it did, but it did stop me out first. So we pull back in, place a slightly lower low, and then we pull straight out and just kind of pull back up. All these little boxes here that you see on the wicks of these candles are areas of high absorption, okay? So high sellers got absorbed here, high amount of buyers got absorbed here, high amount of sellers got absorbed here. Strong buying imbalance transpired here. Likely took out whatever stops were sitting underneath this last little consolidative state. And then on the way up here, again, some large imbalances and things of that nature. But here nor there, we ultimately took out, we broke higher, pulled back, broke higher, pulled back. More absorption transpired right here. Pushed back up. We banged around this level here for quite a while. This is 87.35. This is the ascending trend line that you can see above my head. And ultimately, we finally gave it up right here. I'm not a big fan of trying to pick the high. I've learned my lesson. I've tried to do that a lot over the years. Be like, I'm going to call the high, I'm going to call the low. I've learned to not do that. I've learned that more often than not, what happens is sometimes I'm right, sometimes I'm wrong. Normally there's a retest of the high. You can see today we placed the high, retest it, and then push through the high, and then ultimately set the final high. While I liked all of these, particularly this one and this one, as a high for the day, I would have been wrong. Okay? So I just would have been wrong. So instead of that, I don't do that anymore. What I now look for is a lower high, or inversely to the upside, a higher low. Why do I do that? Because that's how trends work, right? It's a sequence of impulse, correction, impulse. I'm looking for the second impulse, right? Same thing here to the upside. You have an impulse, you have a correction, you have an impulse, you have a correction, you have an impulse, you have a correction. Notice that the low gets higher and higher and higher and higher until it doesn't anymore, right? The 90% of my analysis, 99% of my analysis on price action is all done by trend lines and channel structures, which I all hand draw. Why? Because they work, right? Like they've worked for 100 years. They work. Right? You now, once you have an understanding of market structure, you have to look at volume, liquidity, order flow, and find out where these key areas are, right? I can't just guess where the higher low is, or I can't just guess, where, the lower high is going to be, right? Like I identified this by order flow, right? This wasn't just like, oh, I'm going to pick this candle because I could have picked that candle or that candle or this candle. I can't just pick a candle. Like, I need conviction, and that conviction comes from understanding what actually took place inside of this very specific candle. And I'll pull it up on the other screen and see. Yeah, like this had a nice, beautiful, clean top right here. It had a selling imbalance, one tick off the high, and a high amount of volume took place in the wick, and we failed to close above it. That high selling imbalance and the second tick from the top, for me, clean deal. Okay? We had a finished auction at the top, we had a selling imbalance, we had a decrease of buying interest and an increase in selling interest. To me, that was it. And what happened? I mean, price came what? A tick against me? Tick and a half against? Right? And the market just sold right off. Sold right off to where? Where did the market stop selling off? At that line I drew at 6:30 this morning off this low. Right? If I'm going to mark up my chart, it's not because I want it to look confusing or look pretty. I want to mark up my chart because each thing that I mark on it has a purpose. It serves a purpose. Right? I'm expecting some reaction to that level. I was expecting some reaction to this level. Listen, I didn't know how long it was going to take. Could have tested once and crashed. Tested 2, 3, and then even pushed before it finally gave up. Do you know what this push is? Right? Because everybody that got short here, or everybody that had stop losses here, all these orders that got filled, whatever was left, this price action consumed, and you could see, what part of this do you want to be in? I want to be in the quick, efficient sell-off. That's what I want to be, right? Where do I want to take profit? Basically anywhere price interacted with this trend line, right? So here I want to take some profit. Down here I want to take some profit. And then down here I want to take some profit. And guess what? Right here where the trend line reacted, or was reactive to, and that line I drew overnight, like we've held this now since 2:30, and now it's 3:15. So 45 minutes, we just kind of been bouncing around here. That's what it is. But if I can identify higher lows, or I can identify lower highs, I can then execute them if I can get them to act in a way that they're testing some form of support or resistance, hand-drawn, and then it's just a matter of when that particular candle approaches that trend line, does that particular candle, does the interaction between buyers and sellers, does the liquidity, does the order flow, do all those other little pieces come into play that tell me, hey, there's a good chance that we're going to push lower or push higher. I mean, even on this, when we broke this high and we came in and we retested, we had a lot of selling absorption here. A lot of selling absorption, and you can't close above it, or buying absorption rather, right? The buyers were absorbed by sellers. There's a better chance than not that we're going to push lower. And that happened on the way up, and it happened on the way down, right? And then what happened here? It happened on the way up. Okay, so getting to being able to identify what that order flow looks like is what will help you read what each of these candles are doing. Now, at the same time, you don't want to focus on every single candle. You want to focus on the candles that mean something, right? This told me that there's potentially a high put in. Here's the impulse. Here's the correction. This trend line was support. I know it sounds stupid, but that's all that it takes. And right here, it tested it. There was a bunch of buying absorption by the sellers. It failed to close above it, and the market sold off the next 3 candles. I don't care if it's a random candle. Like, I don't care what happens in this candle, right? They're not touching anything that I'm interested in. It's only when I'm interested in something that I want to look deeper. I want to look at the liquidity. I want to look at the tape. I want to look at the delta. I want to look at the footprint. I want to see if there's absorption. I want to see if there's an imbalance. I want to see what's going on at those levels so that I can then make an educated decision. If I do my job correctly, right, price should not go back against the candle I identify. Where am I wrong, right? I got this candle to the upside, higher, low, at a trend line, a support trend line. Where am I wrong? Right underneath it. Right? If the sellers come back and dip, for whatever the reason, and the buyers can't sustain them, I'm wrong. So if I enter at the close of this candle, 86.50, and I put my stop at the low of the candle, 86.42, what am I risking? 8 ticks, 10 ticks, couple ticks of breathing room? But if I'm right, I'm going to get a push out of it. So I encourage you, and that's all these videos are about, it's encouraging you to take a step back, simply listen to the market. And I'm telling you this because I have struggled over the years with having a bias. Right? I come to the computer and I'm like, hey, S&P is going to do this today, or crude's going to do that today, or gold's going to do the other thing today. And unfortunately, that bias has bit me in the butt over and over and over again. So I share these videos with you because I want you to reflect on your trading, right? So that you can sit there and go, what's important? There's only 2 things that matter: volume and price action. Outside of volume and price action, nothing else matters, in my opinion, right? Now, price action is understanding what's happening on the screen in the moment, right? Being able to say, okay, I'm placing a higher low, here's a new higher low, I've just broken a prior high. Like, that's the price action component. You need to be able to read it, right? Some people like a 1-minute chart, some people like a 2, a 3, a 5, a 10, 15, whatever. Use whatever you want to use, okay? I look at a 5-minute, a 3-minute, and a 1-minute, okay? I have a variety of screens here. I look at all those things. Then, when it comes to my big picture analysis, it's a weekly chart, a daily chart, a 4-hour chart. That's what you see in the background here, okay? My traders knew this morning at 87.35, there was a good chance that we were going to find significant resistance for crude oil. Well, guess what? Yes, we pushed through it, okay? It's an area, a channel or a trend line represents an area of reaction. And then you have to decipher the reaction when price gets to it by looking at volume. Now, what is volume? Not only is it the volume that raises from the bottom, right? It gives us an instant picture of how much involvement there is from participants, right? And then there's liquidity. Liquidity is where there's resting orders in the market. How are they affecting what price is doing right now? Right? Then there's the tape, which is time and sales. You could see how quickly orders are coming in and out. Right? Are they buy orders? Are they sell orders? What battle's happening as it's happening? Right? You can look at delta for the session. Say, all right, is there a high area of buying or selling somewhere in here? A look at volume profile. Say, all right, is there high or low volume nodes in and around this area? These are all things you can look at. And then you can look down all the way into a footprint chart, which is going to give you the bid, the ask, the delta. It's going to give you imbalances. It's going to give you the ability to interpret absorption, right? These little boxes that I have here, right? Those are areas of high absorption. Doesn't mean that it's going to hold, but it just means that there's a probability that those areas of absorption are normally where buyers or sellers get trapped, right? They're called traps. And from there, you could see large moves, pushed from those areas. So those are all components that I encourage you to learn about, right? Take the time, learn about price action, take the time, learn about volume and all the components that go with volume. Take the time with liquidity and understanding what the tape looks like and understanding what the depth of market looks like and understanding what delta is, understanding what a footprint is, understanding how to put all those pieces together. Because at the end of the day, no one piece creates viable trades, okay? There is no one piece, in my opinion. So I start higher time frame analysis. Without that, I have nothing. Higher time frame analysis. I need to know what the market's doing, right? I need to know where I'm going to potentially find support and where I'm going to potentially find resistance. Right? And then I need to work my way all the way down to the intricacies of saying, okay, here's a higher low and there's a bunch of selling absorption here. There's a good chance that this may be an area we drive off of. And if I'm right, we go higher. If I'm wrong, we break below this candle and I get stopped out. Okay? Same thing here. I like this. Higher low, absorption, buying imbalance. Market comes down really strong. Boom, rejects really aggressively. All right. Market comes in, breaks this trend line. You can see we get a little bit of indecision. We fail to stay above. We fall back. We break this low, which tells us that we're probably in for a lower high. Right? That's all just price action analysis, absorption, understanding of what's happening by just looking at the screen. Right? You need to know, okay, this has happened, what's going to happen next? Then you dive deeper into the other components, and then you put the puzzle together, and that's where your trade plan comes in, and you go, okay, I have ABC all the way through XYZ, and I'm ready to take risk. I'm going to put risk on because I believe that all the things that make sense to me are about to transpire. Right? Like this, lower high, perfect. Hit all the boxes. Right? Boom. Like I feel like when this that component is done correctly, you're picking higher lows or lower highs, and you're executing with great discipline. Now, are you going to be wrong? 100%. Right? And where are you wrong? Where your analysis proves that says, hey, Mr. and Mrs. Trader, I had a belief that the market was going to go higher here. It did not. Boom, you get stopped out. That's it. Right? Then you wait for the next setup. Mr. and Mrs. Trader, I believe that the market's going to go lower here. Okay, great. I'm going to put a short order in. I'm going to put a stop above it. I'm going to put my target below. If the market goes in your favor, great. Pay yourself, protect yourself, carry on with your life. Right? That's what it takes. All right, guys? So I know this was a little long-winded, but I had a great conversation with my traders this morning. I wanted to kind of bring it to you guys as well. We can take a look at some of the other markets. We just talked about crude, obviously. Gold was a big one today. We identified these higher lows the entire walk up, right? Got 8:30 data this morning. Unemployment numbers, placed a low, placed a higher low, placed a higher low. And we just talked through this as it was happening. Placed a higher low, placed basically an equal low, placed another higher low, placed another higher low, right? Placed more higher lows. This is as we were leaving, just kind of parting ways. And I said to them, like, listen, if this pivot holds here, if we don't break, the 13 and the 8, probably can continue grinding. And we did until we ran into a couple tops here, and then we started falling off. But notice the market from the low off of the news, we got an impulse, a correction. Boom, higher low. Got an impulse, correction. Boom, third higher low. Impulse, correction, higher low. Consolidation, slightly higher low. Impulse, correction, higher low. Impulse, correction, higher low. All right, so if the trend is still intact, we know that because we're closing above the prior high each time. When we stop closing above the prior high, then we know that the trend has either fallen into consolidation or it's over. And it really doesn't matter. It just that's it. It's over, right? And then we wait until we can see things come kind of back to light there. And for the NASDAQ, same thing, right? Here's the low with the news, higher low, higher lows here at the top of the opening range. Another higher low, great push right here. We come up, what do? We place a lower high, right? Impulse, correction, lower high. We break these lows, we've just changed. This is change of structure, change of market, call it whatever you want. Guess what? Look at these lows here. Impulse, correction, where does this peak into? Right? It peaks into the lows of prior price action. You zoom it in. See the low of this candle? Where do you think we run out of steam? Right here. Boom. Impulse. Correction. Impulse. Test this low. Find support. So this is the price action component of understanding what the market's doing. Right? If you want to use moving averages to give you a better picture, great. If you want to use MACDs, great. Whatever you want to use. But if it doesn't serve a vital purpose, don't use it, right? Like this is my reference screen. This is the screen that my clients get to see. They see all 4 markets. All my reference points are on these screens. But then I go to my screen where you see that there's just price action and whatever I draw on it, because that drawing has a specific meaning. And then I just look on the other screen and I can see the reference chart. I can see where all the pivots are. I can see the prior day high and low. I can see the opening range and all that stuff. But on my chart, I only draw things that matter in that moment, right? In that moment, I saw absorption and I saw a buying imbalance. Right? I see these trend lines. I have to respect them and the area around them. So I encourage you over this weekend, in your spare time, whenever it may be, whenever you're reflecting on your trading, higher time frame analysis is extraordinarily important. Okay? Extraordinarily important. Right? There's a lot of, falling into let the indicator do it for me. You need to learn how to do higher time frame analysis. You have to know what the bigger picture's doing, when, where, and why, and how that's going to affect your day. Right? Then you need to understand what price action is doing, when, where, and why. Right? This looked very sloppy. As soon as I put a few trend lines on it, everything was clear. I knew where support was. I knew where resistance was. I knew what was ascending. I knew what was descending. Right? I knew where possible engagement could occur. So those are the steps you have to take. Listen, if you're using software, there's nothing wrong with software. Software's great. Okay? Just make sure that you have a trade plan unique to employing whatever the specific software is that you're using. I don't know what software you're using, whether it's a software I offer or not. I only work with softwares that employ value towards volume and price action, because I genuinely believe those are the only 2 things that matter. So any software program that I offer leans into helping a trader understand volume and price action better. Because without that understanding, they're never going to build the foundation to get to the next step. The next step is a full understanding of volume and all the intricacies that go with it, price action, multiple time frame confluence, and all the intricacies that go with that. So if you're looking for what to study, in my humble opinion, those are the things to study. Okay? So I hope this video was informational. If you enjoyed it, I appreciate a like. You can share it, subscribe to the channel. But again, I'm just here to kind of give these daily lessons and recaps focused on the mistakes that I've made over the years, and that I hope to help somebody avoid making themselves. So God bless, guys. I hope you have a wonderful weekend. I'll see you in the next video, and take care.